What's going on, you guys? My name is Zach Hartley, and in this video, we're going to shake things up a little bit. Instead of looking at a stock and a company, we're going to look at my hometown of Calgary, Alberta. I've pulled the most recent annual financial statements, so we're going to see whether or not the city of Calgary is making money or losing money, and we're also going to dive into where they are spending that money. Here's everything you need to know. Let's go. Okay, so Calgary, Alberta, if you're not aware, is kind of a medium-sized city about 3 hours north of the US border, about 2 hours east of the Rocky Mountains, and we're located in the province of Alberta in the country of Canada, and we're just above the US. This is what our downtown looks like, and the Rocky Mountains in behind it. So a really nice city. I've lived here my entire life. I went to university here, and the population of the city in Calgary is 1.3 million people. The main industry is oil and gas, and I found out this stat just the other day, but Calgary is actually the sunniest major city in Canada, which I had no idea. That completely surprised me. And our mayor, his name is Naheed Nenshi. He's this funny looking guy right here. And let's dive right into the financials. Now, the revenue for Calgary, Alberta, this is a nice little graph that was included in the report, and I thought it did just a good job of breaking down where the money is coming in 2019 and 2018. And as you can see, the main revenue source for the city, the main financial driver in this city is property tax. That is the number one source by a very large margin of how they bring in money. After that, it is utilities, it is user fees in other situations, it is government transfers and related capital. But realistically, property tax makes up the largest percentage of their revenue in both 2018 and 2019. Now, when you look at their expenses, it's a little bit different because there's a lot going on here. So it's kind of like the top 5 here are the major expenses, that being fire and police, these top 2 right here. Next one is public transit, roads, traffic, and parking, and then water services and resources. So all kind of city services that the people of the city need and will use on a daily or a regular basis. Now, when you start to look at the income statement, this is where it gets really interesting because as you can see on the top here, this is all of the revenue that the city of Calgary brought in, and this top line, net taxes available for municipal purposes, $2.1 billion. This is the chart that we just looked at right here. So this is how they're bringing in that $2.1 billion. And then they also have some revenue coming in from the sale of goods and services. So renting out the city-owned facilities, for instance, some government transfers. They also have investment income, money that they have invested that they're now generating income in. Fines and penalties, so the traffic cameras that you see, that's probably located in here. Licenses and permits, so maybe your license to open up a restaurant, those type of things. Miscellaneous revenue is just extra charges. And then they do own equity in NMAX, which is kind of a local power company. And so this is how the city of Calgary brings in revenue for a total of about $4.13 billion in $4.17 billion in 2019. This is the actual number right here in the middle, and this is the budgeted number here on the left, and then on the right is the actual for 2018. So this comparison of 2018 to 2019 is the key and what we're really looking for. And when you look at police and fire, it's really interesting because from 2018 to 2019, we spent less money on police and fire in that comparative year, even though the population of Calgary went up in those years. So that's really interesting. And then as you go down here, you go to public transit, and you can see in 2018 we spent $567. In 2019 we spent $607, but the budget for 2019 was $470. So we spent $130 million more on public transit than we had budgeted for. So that's a little bit of a red flag. And then when you keep going down here, you can see that roads, traffic, and parking, we spent $425 in 2018, $445 in 2019, and we only budgeted for $282. So we spent almost, $168, $170 million more on roads, traffic, and parking than we had expected to or than we had budgeted to. So a couple of red flags in here. And then same thing with social housing. In 2018 it was $277. We actually spent $279 in 2019, but for some reason we only budgeted for $209. And when you look at that, that's like a 25% difference right there in the budgeted versus actual spent. So clearly somebody's not able to control their money. Now, obviously, we need to be spending on social housing, especially because that kind of tells us that we have an underlying problem, but you need to be able to accurately budget for it. That's a huge thing. So really, really interesting dynamics going on right here. And as you can see, as you scroll down here, these discrepancies in budgeted versus actual for 2019 are what has led to the discrepancy in the actual net revenue for the city. They were budgeted for $609 million and they only ended up bringing in $258 million. So they brought in less than half of what they had budgeted for the year of 2019. So at least they made money, but definitely not a good sign, seeing as we are less than 50% of what we expected the excess revenues to be for the city. So not a good sign. And then when you do the math on everything else, there's definitely some adjustments in here because the City of Calgary owns part of NMAX, or all of NMAX actually. And so the actual net revenues for the city, revenue minus expenses, was $1.3 billion. However, a lot of this is just adjustments based on investments and equities. Now, when you dive in here and you go into the expenses and you categorize it by object, is what they call it, expenses by object, you can see that salaries, wages, and benefits, out of the $3.9 billion in expenses, salaries, wages, and benefits made up pretty much 50% of it. That's more than 50%. That's like 51% of all of the salaries, wages, and benefits. It went up from 2018, and that's, I got to compare that to other cities, but half of the expenses for the city is in salary, wages, and benefits. And then when you dive into who's making the top dollar, this is how it breaks down. So this chart at the bottom here is the mayor of Calgary. In 2019, he made $208,000. He made $39,000 in benefits for a total compensation of $247,000. That means the one dude, this mayor of Calgary, made $247,000 in 2019. In 2018, he made $242,000. So that's a pretty good paycheck for one person. And then when you look at the city manager, this guy was really raking it in. He made $346,000 and then made a $57,000 in benefits, giving him a total income of more than $403,000 in 2019 and only $392,000 in 2018. So these guys are cleaning up in downtown Calgary. The city mayor makes $208,000 before benefits. The city manager makes $346,000 a year before benefits. That's absolutely amazing. I don't know how many councillors and designated officers we have. Hopefully 10 or 15 for this rate, but geez, it's pretty crazy. And then I did the quick math on this, and if you look at the Vancouver city mayor, he makes $171,000. I think it's a she, actually. I misspoke there. And the Toronto city mayor makes $192,000. So the city of Calgary, which is much smaller than both Vancouver as well as Toronto, makes more than both of those mayors. That's a pretty good job. Whatever Nenshi did to get that salary and negotiate that rate where he gets paid more than the mayor of Toronto, somebody caved in and somebody gave it to him, that's for sure. Now, when you look at the balance sheet, this is basically assets and liabilities. Now, it is a little bit tricky to read here because it's broken into financial assets, which is on the top here. So basically cash and investments and receivables and things that you can kind of see right here. And then there's also non-financial assets. Non-financial assets is like buildings and cars and vehicles and things that the city is like a hard asset that's like already bought, that they own, that's like branded with the city. That's valued at $18 billion. And then when you look at the rest of their assets and liabilities, financial assets, $7.5 billion, but a fairly small cash balance at the moment, $263 million. And the only reason that I say that that is a small cash balance is because their bank indebtedness is $51 million and their accounts payable and accrued liabilities is $811 million, which more than likely is due within the next 12 months. And they only have $263 million worth of cash at the filing of these statements. So obviously we're a couple months, almost a year later now, but a little bit of an interesting predicament. I'm very excited to see how this compares to the next set of financials that we'll look at. We'll also notice that most of their assets are invested. So investments right here, investment in NMAX right here, and then other assets. They do have $2.8 billion in long-term debt. That is this one right here, note 14. If you want to read into any of this as well, you can just go to the City of Calgary 2019 annual financial statements. If you just Google that, you'll find it really easily. And then, like I mentioned, $18 billion in tangible assets. So I assume that if they ever needed the cash, they could sell a building, they could sell some vehicles, they could sell some property. They could do whatever they needed to generate the cash. So obviously, there's no risk of the City of Calgary going bankrupt or running out of cash. I don't think that's not what I'm trying to say here at all. But I do have a couple of thoughts after reading the report, reading the annual statements, and going through all of this. So here are my thoughts. Number one is that the City of Calgary relies way too heavily on property tax. That makes up our number one revenue generator by like a factor of 3, which is a little bit scary because like as an investor and as a business owner, you don't want to have all of your revenue coming in from one source. So number one thing that we need to do is diversify our revenue streams. That's like a big thing. Second thing is that the mayor of Calgary probably shouldn't be paid more than the mayor of Toronto or Vancouver. Those are bigger cities, bigger populations, a little bit more attention, a little bit more pressure. I have a hard time believing that the City of Calgary mayor should get paid more than the larger cities in the exact same country. So that's kind of interesting. I also can't believe that the city manager makes $400K per year. Like that just seems absolutely unbelievable to me that we are going to pay a city employee, somebody that manages day-to-day operations, $400,000 per year, plus an amazing pension I'm sure is packed on there. So that just seems like a very, very high compensation, and I think that could probably use a little bit of trimming. I also absolutely hate that the City of Calgary is still operating golf courses. A couple of reports came out 2 years ago that between the years of 2015 to 2017, the City of Calgary lost like $2 million operating city-run golf courses. And I just think for a City of Calgary that has snow on the ground for 6 months a year, you should not be in the business of operating a golf course. You should leave that to an entrepreneur and let private industry run a golf course. Like that's just not the business that the City of Calgary should be in. So I really think that's a big problem. And then the next thing that like kind of hit me is we spend a lot of money on public transport, and in the new age post-pandemic, where being too close to people is kind of a concern, and you don't necessarily have to work from an office or work from downtown, and you can meet people virtually, I'm starting to have some concerns about how much money we're spending on public transportation and whether or not that will be as important in the post-COVID era. Thinking lately is that maybe instead of trying to build out buses and trains the traditional way and build up a infrastructure similar to what New York and London have with amazing trains and buses, instead of doing that, maybe we should be trying to skip a step, and maybe we should be looking at making ride sharing more accessible, making autonomous driving and the ability to go rent out your car to somebody more accessible. Maybe we should be making those next big opportunities a little bit closer to reality, and maybe we make Calgary the testing ground for it, because I think there's a big opportunity there. And I think the last thing that we should be doing is trying to cram more people into a confined tube and ship them downtown where they're in a confined office. Like that is just the last thing we should be doing after everything that's happened this year. So these are all my opinions. These are all just my thoughts. But if you guys get any value out of this video and you go do this for your own city, be sure to click that like and subscribe button. I sincerely appreciate it, and we'll see you guys in the next video. Good luck trading. Good luck investing. Talk to you soon.